This might sound weird, but what has helped me the most and progressed my trading humongously was the fact that each and every trade is taken as a different iteration, and the fact that when I'm in a trade, I'm completely focused only on the trade, and that's it. Listen, I'm not gonna sugarcoat anything. Trading is hard, and there are a lot of stuff that will make you profitable, or at the same time, there are a lot of stuff that will make you unprofitable. And there's not just that one thing that will completely blow you out of the waters and make you profitable from one day to another, but everything adds up to this sum that I don't even think that consistent profitability is. I mean, what is consistent profitability? Consistent profitability is just sometimes you're doing very good, sometimes you have worse days, but you are resetting so fast that chances are that over a span of, I don't know, a year, 6 months, 3 months, you will end up being in profits just because your winning days are bigger than your losing days. That's it, right? So there's not much about it here. This is what we are striving for. This is what consistency means. At the same time, I think that most people don't understand the fact that consistency doesn't mean that every single trade will look the same. Consistency doesn't mean that we will have winning days or winning months or winning weeks or winning years all the time. Consistency doesn't mean that trades are getting easier. So if I would have to choose something to talk about, it would be the fact that you should be focusing on your process, and you should never focus on each individual trade and what exactly you are getting out of it, or on the objective. But at the same time, even if it sounds a bit it sounds repetitive and it sounds a bit counterintuitive, but I think that whenever you're in a trade, you should forget about anything else. And this also goes hand in hand with the fact that you're resetting as fast as possible. So for example, let's say that you're in this trade, you're in either profits or drawdown, it doesn't matter, right? You're either having a good trade or a bad trade, it literally doesn't matter. This is the point where you don't really care about the objective of the trade itself, but mostly you think about how well you're doing in a week or how well you're doing in a month, right? I have added this to my process actively, where I'm thinking on a monthly basis. I was actually trying on a weekly basis before, but I think this didn't work for me just because the time horizon is not as good, especially if you're keeping a trade for 1 week, for example. You're not really getting anything out of this weekly review, right? You are probably going to get more value out of checking your monthly trades and having an objective review on how you did and what you did good and what you did bad. But going back to the trade, so you're in a trade, doesn't matter what how good or bad it is, you have to be 100% focused on the trade. So forget about extrapolating about, oh, I'm going to lose this much money, or I'm going potentially, if this goes here, I'm going to win I don't know how much. It literally doesn't matter. Just focus on this trade right now. I have noticed, especially the past few months, that the biggest winning days for me and the biggest days in terms of risk management and actually trade managing my current trade so for example, if I wouldn't have actively trade managed something by literally 100% focusing on the trade at hand, I would have probably lost more, right, on the trade, or I would have won less. So let me give you an example. Let's say that you're in a winning trade right now and you have compounded it, I don't know, 2 times, right? So let's take this chart for example. Let's say that you have shorted around, give me a second. Let's say that you have shorted around here, right? Let's say that this is a really good short, by the way. Let's just say that you have shorted around here. So this is your sell 1, right? And this one is, it's not it. It's all I'm gonna say. So this is your sell 1. It's still bad, but whatever. Sell 1, and you're looking to compound your trade. This was on Thursday. So you are getting this good move on Friday here. and you are in profits, obviously. So you're on a you're in a sell position on a short, you're in profits. Probably your stop loss is around here, right? Stop loss 1 should be around here, whatever. You understand the writing on the wall. Now I'm looking to compound my trade, right? If I would be in this short, I would have looked to compound my trade, just because of the fact that I am not the type of trader to say, oh, I'm in some small profits, let's take the trade off. No, this is not the way to do it. Of course, some people do it, and I don't commend this. I think some people can obviously become profitable with this strategy. I couldn't and I can't trade like this, just because I know that most of the people do this, and when I know that most of the people do this, I'm probably going to be I don't know, not very attracted of the idea of doing what everybody else does. So you have sell 1 here. I would have probably looked to compound when we would have gotten the break of the overnight range on Thursday, right? So let's say that I would have had my compound here. So let's say this is a sell 2 position, right? So this is a sell 2. At this moment you have, let's say you have sell 1, sell 2, so you have a compounded trade one time, the initial trade compounded, the compounded trade here, and now you are up to the fact that you are in front of this trade. What are you going to do? Well, this sell 2 position is very close to actually the current price, right? If you're trading around Friday, you will understand that most of the day we have traded around your compound 2. You had to keep this trade overnight, right? And let's say that you have non-ironically thought about using your second compound. So this is initial position, first compound, this is the second compound, which is sell 3, whatever. This is a 3 here. Let me try and do. Okay, this is a sell 3. It looks a bit prettier. Come on. And now you are probably going to have your stop losses. Probably this will be also, I mean, this is how I would do it, right? So I have stop loss 2, and I would have here my stop loss 3, right? At the first entry, whatever, 3, just whatever, you get the point. So at this point, I'm faced with this trade, right? And I would think that the normal guy that would go in this trade, well, obviously normal people wouldn't compound into trades because most traders are losing traders, right? But let's say that you are in this trade, first position, 2 compounds, and now you're saying, oh look, if I would have this chart going to, I don't know, 91.5k on the very high of the former range, I would win this much. And this is the wrong way of thinking about this game of trading. The process is what matters. You are in front of this trade right now. You are having 2 compounds very close to each other. This trade is in front of you. You are in a weekend price action range where everything can happen because the actual the volume is so low that it doesn't matter. And now you are going to be in the face of this trade saying, I'm looking at 91.5 because oh my god, look at how much profit I would get there. This is the most stupid thing you can do. You are up in front of this trade. What you should be doing is thinking, should I be de-risking any of these 2 compounds, since we are in a weekly price, weekend price action range that can literally do anything it wants. It can literally go here and it can take my stop loss here. It can literally do whatever, go here, take this low, maybe even take this low. I don't do anything, and then it just reverses and takes my trade once more, and I'm in losses here. Like, this is what you should be thinking about. You shouldn't be thinking about I will make exorbitant amount of profits when it will go lower. You should be thinking, what happens when I'm faced with a 2 times compounded initial position in a weekend price action? Am I okay with the fact that this might actually cause a loss, or should I be actually de-risking because this is it's even more uncertain than a overnight range where you have 2 days of weekend price action that anything can happen in. So I think this is the way that you should be thinking about trading as a whole, and you should stop thinking about your profits in the market. Okay, you don't need these profits. This is how you should be thinking about trading. If I want to succeed in this trading thing, which is a business, right, I have to probably think more about what's in front of me and what's happening with my position and my chart and my idea, rather than extrapolating about the profits I would make if this trade would go even more in my profits. Obviously, you are pressing on your position, you are hoping for more profits, you are actively thinking how to take your profits and de-risk and so on and trade manage. But this is probably the biggest mistake that most of the traders that aren't profitable and not consistent enough do, which is that they think about their profits rather than thinking about how can I not lose more in this position than I would like to. Because at this point, if you're thinking about this being a weekend price action, I would say, okay, no problem. I have my stop, my sell 3 here, which is the second compound. Okay, no problem. I'll just delete it. I'll just take it off at, I don't know, $10, $20 profit, $10, $20 in a loss. It doesn't matter. Okay, the idea is I'm de-risking in order to let my idea run, and if I will get on Monday an opportunity to maybe even sell once more here, maybe sell 3 would be a better idea here when we go actually out of this bottom range, right, the bottom of this range. So this is how you should actively think about your position. Just stop thinking about the profits and think more about how can my process get better in order for me to be better. And there is one more thing here that it's easily it can deceive you really hard, which is, let's say you keep your sell 3 here, and then on Monday this chart literally does this. Let's say it literally does this. It takes the top side of this range. It literally bursts out and just goes to 103k. Obviously, you are probably having your stop losses in place, and you would have already lost this trade. But keep this in mind: if you would have properly de-risked in weekend, understanding your present position and trade, and understanding that the probabilities of going higher could probably be better in a weekend price action range, just because there is a lower amount of volume, then you would probably not be attacked mentally. Let me explain this. You have a mental capacity and you have a mental resource as well. The moment you are de-risking properly, and even if you, for example, would have lost this trade, you wouldn't have had 3 positions in one, right? Because you would have had if you are de-risking properly, you don't have initial position and 2 compounds. You have only initial position and 1 compound. And at this point, you will lose less than you would have lost if you wouldn't have paid enough attention to this trade, if this makes sense. Okay, so this is important because at this point, your mental capital is actually preserved, where you're saying, okay, I de-risked properly. I understood the fact that this trade is the most important thing that I should be doing right now. And I noticed for myself that I de-risked in a good way, and now I'm losing less on my idea. And this should actually be a vote of confidence for yourself that you are becoming better. And this is something that you can literally see in the chart and literally see in your performance that you are doing better. You should be more confident in yourself because you notice that this trade should be de-risked. You de-risked, you did extremely well, and even if it's a loss, your process is getting better. Your expected value will rise over time just because of the fact that you are giving yourself votes of confidence. Okay, I hope this video made sense and it will help you in the short and in the long run, because we're here for continuity and for perpetually learning about the markets. And take care and see you in the next video. Bye.